a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Let's get the spoken word on this choppy stock market that we began the new year with our chief equity strategist, John Blank, who joins us via Skype from the West Coast, LA to be exact. John, does this choppiness that we're seeing in the stock market in any way, in your opinion, reflect a fragility that exists in the U.S. economy?
Absolutely, Terry. The way to think about this situation in the U.S. economy is always through the oil price right now. The oil price collapsed partly because it was related to a collapse in the euro, which makes the dollar stronger, and it also caused Canada to lose a lot of GDP growth and Mexico to lose a lot of GDP growth. And those had feedback loops back to U.S. exports too. So what we're learning here is that when all three countries in North America, Canada, Mexico, and the United States, are reliant upon oil production, that has a negative effect when the production gets half the price. So this is actually what's going on, is people are realizing that for this particular unit, or this advanced country unit, it actually has been negative because of the amount of oil production that had risen in the United States over the last 10 years.
How does Greece factor into our market activity here?
Well, Greece is coming in, Terry, because the European Union has cut sovereign debt interest rates for Spain, Italy, and Portugal from like 4 or 5% a year ago to 2% this year, or even lower. So what Greece says is we're locked into a bailout with terms of interest set by the IMF and the EU and the ECB. We want a deal that takes us down in interest and takes our principal cost down so that we can also get it back in the game like Italy and Spain are. So they're entirely doing the right thing, and their politics, their voters have all shifted from the right to the left to do this. And what's happening now is just a negotiation, and the Germans are the bad cop, and the Greeks are the good cop, and the middle is the finance minister for Europe, and they're all going to strike a deal. And this is the sausage being made. It's not pleasant to watch. It will happen at the last minute when we get a deal, but we're going to get a deal. Greece is going to be fine, and it is going to solve something important, which is to get Europe back into a growth space. All
right, now let's talk about the recent release of the minutes from the last Fed meeting that came out just a day or so ago. The language used in those minutes indicates that the Fed is not in any big hurry to raise rates anytime soon. So do you think, if that's the case, that that's sending a clear bullish signal to the stock market?
Absolutely, Terry. There's no question that bond and stock returns are related. And when you raise the amount of interest on a bond, that you raise the amount of value for bond investors. So there's no question when the Fed keeps interest rates low that they are forcing people into the lower end of utilities and healthcare and the consumer staple stocks, and they're keeping them there because that's what's keeping a lot of the S&P 500 up now is these dividend-paying stocks. So that's what's going on here. That's what's keeping the market up, and frankly, the Fed knows it, and that higher S&P 500 is feeding back in to consumption growth, discretionary spending, more jobs, and higher incomes. So there's no way they want to get off that gravy train anytime soon unless they have to. The main thing to understand about the Fed this time around, and we haven't seen this really in U.S. history, is this is an open financial economy, and we are beholden to the QE decisions of particularly Europe in this case. And what's going on here in interest rates also plays out through the dollar, and they are aware of this, and since the dollar is strong, they've already got an interest rate hike effectively through the dollar.
All right, let's talk quickly about some sectors that you have identified as being leaders here going forward. Consumer electronics generally leading the way, huh?
Absolutely. The key space in the economy has been the semiconductors, and that goes across all kinds of semiconductors. Wi-Fi semiconductors, tablet semiconductors, personal computer semiconductors, things that are in appliances. We have become so reliant upon the IT world for growth, then this is all of those companies are really bidding up the IT space. And then, of course, Apple, which is the product that's containing these semiconductors. So there's no question that without the Qs, without the IT space, again, that's a huge source of strength. And frankly, it's still where the value is.
Okay, you also say consumer discretionary is attractive. Tell me more about that.
Absolutely, Terry. I mean, again, we're looking at record high stock prices in the United States, particularly on the Qs. You're looking at some people who have salary paying jobs in these firms, engineers, software engineers. They have the discretionary income to go out and spend and keep this economy afloat. And that is another space that's been strong for years and it's still strong. And I think given last year's profit taking and some of the reductions in valuations in the consumer discretionary space, if you're careful and you wait properly, you're probably going to find an entry point here.
All right, give me your quick broad market outlook going into mid-year. We have a minute.
Mid-year, I think, you're looking at a situation where there's probably going to be some rotation into small caps. That's going to continue to be a story for 2015, and then you're probably going to see a rotation into the international space. The smart money is already moving in there and bidding up stocks. So I think the surprise is outside the United States to the positive, and I think the surprises are actually to the negative for the United States through the mid-year.
Okay, John, thanks for that. That is the spoken word on this choppy stock market and some sectors that John has identified as attractive. With John Blank, I'm Terry Ruffalo.